Welcome back to The Explainer. Today, we are cracking open the latest report from a real estate giant to see what it tells us about the housing market on the West Coast. Let's get right into it. So, we're talking about Essex Property Trust. They manage a staggering 62,000 apartments. Now, why should you care? Well, because their numbers, they give us this incredible behind-the-scenes look at the economy in California and Seattle. It's like a real-time report on where people are working, living, and spending. The big takeaway right from the pop, it looks like the West Coast is making a comeback. Essex had a fantastic quarter, even beating the U.S. average. That's a pretty big deal, and they're feeling good about what's ahead. So, let's dig into how they pulled it off. Okay, so here's how we're going to break it all down. First, we'll hit the big headline numbers. Then we get into the really interesting part, this growing split between Northern and Southern California. We'll look at how the AI boom is pouring fuel on that fire, see how Essex is playing the long game, and then wrap up with what this could all mean for 2026. All right, Section 1, the headline numbers. Let's look at the figures that really got Wall Street's attention. So they beat their core FFO target by 3 cents per share. Now you might be wondering, what on earth is core FFO? Just think of it like this. It's the real estate world's special way of measuring cash flow. It's the key metric for these companies, and beating it is a really positive sign. And because of that strong performance, they actually raised their financial forecast for the whole year. That's a huge vote of confidence, right? They're basically telling investors, hey, things are looking good. So yeah, just to hammer it home, when you hear FFO or funds from operations, don't get bogged down. Just think, how much cash are the company's properties actually bringing in? Simple as that. Okay, moving on. Because this is where the story gets really fascinating. Those strong overall numbers, well, they're actually hiding a pretty dramatic split happening on the West Coast. I mean, just look at these numbers. This chart says it all. Northern California is seeing rent growth of almost 4%. Seattle's at 2%. But then you look at Southern California, just 1.2%. That is a massive difference. So what in the world is going on here? Well, it really is a tale of two very different regions. You've got Northern California, especially the Bay Area, which is just being supercharged by all these AI startups. But then Southern California, it's facing more headwinds, Job growth is a bit slower, and the recovery there is just taking longer. And this right here, this just perfectly illustrates that divide. In some spots in the Bay Area, like San Francisco and San Mateo, rent growth is hitting 6.5%. Meanwhile, down in Los Angeles, it's just 1%. That is a huge performance gap in the same state. So what's the secret sauce for Northern California? What's driving this success? Well, one thing stands out above everything else: artificial intelligence. You have to wonder, right? Is AI kicking off a whole new housing boom in the Bay Area? According to Essexs, the signs are all pointing to yes. They're seeing this just unprecedented number of AI startups pop up, and that's translating directly into demand for apartments. Yeah, it's funny. We hear all about the big tech layoffs in the news, but this report paints a different picture on the ground. There's this new wave of smaller, agile AI companies creating jobs, snapping up smaller office spaces, and guess what? All those new employees need somewhere to live. And a whopping 80% of that AI business is happening in Northern California. Okay, so given these trends, how is a company like Essex playing its cards? Let's take a look at their capital strategy. Their game plan is pretty straightforward, really. They're doubling down on what's working, they're taking cash from some other deals, and are planning to buy nearly $1 billion worth of new properties. And where are they focusing? You guessed it, high-growth Northern California. It's all about upgrading the quality of their portfolio. And this shows how they're not just buying assets, they're making them work harder. They can buy these properties at what's called a 4.8% cap rate, but by plugging them into their own management platform, they can actually squeeze out a 5.2% yield. It's about adding value through their own expertise. All right, so let's bring it all together. What's the outlook for 2026? What does this mean for folks on the West Coast? The company pretty much expects these trends to continue. Northern California is going to keep outperforming, probably ranking among the top markets in the whole country. Seattle's looking optimistic, especially since the amount of new housing being built there is set to drop by 40%. And Southern California? Well, it's expected to be stable, with some slow improvement in LA. So what's the big takeaway here? The West Coast rental market might look stable from a distance, but underneath, this AI boom is creating some major shifts. It's creating this incredible pocket of growth in the Bay Area. And the big question is, are we just at the beginning of a whole new cycle? Or is this economic divide between the North and South only going to get wider?